Today, we're going to pull back the curtain on a professional trading strategy. And here's the secret. It's not about predicting the market. Nope. It's about learning how to follow the players who actually move the market. So let's get right into it. You've been there, right? You see a perfect breakout, everything looks good, you jump in, you're feeling confident, and then bam! The price just completely reverses and screams in the opposite direction. You're left holding the bag, wondering what on earth just happened. It's got to be one of the most frustrating feelings in trading. It feels personal. Well, guess what? You're not going crazy. The market is playing tricks. But here's the good news. Those tricks are predictable. In this explainer, we're going to show you exactly how to spot these moves so you can stop being the one caught in the trap and start trading on the right side of the action. So what's actually happening here? It really all comes down to one word: liquidity. Just think about it this way. If a huge bank or institution wants to buy, say, 1 million shares, they can't just click a button like we do. Someone has to be selling 1 million shares at that moment. So what do? They engineer a situation, like a fake breakout, that tricks retail traders into selling, which gives them the liquidity they need to build their huge position. They are literally baiting a trap for you. And this right here, this is the fundamental mind shift you need to make. Your goal isn't to become a market wizard who can predict the future. The goal is to simply wait for the big players to show you what they're doing, and then you just follow their lead. It's a complete shift from forecasting to reacting. And that brings us to the core of this whole thing, a strategy I love because it's so beautifully simple. It's called the liquidity trap plus confirmation. You can forget about cluttering up your charts with 1 million different indicators like RSI or MACD or whatever else. For this, we don't need them. In fact, we only need 3 really simple tools. First, a few key price levels from the day before. Second, we need a big spike in volume. That's our proof that the institutions are involved. And third, we need a clear, strong reversal candle that basically screams, the trap has been sprung. That's it. That's the entire toolkit. Now here's a really crucial point. Your job starts before the market even opens. You have to mark the battlefield. You go on your chart and you identify these key areas, especially the previous day's high and low. Why? Because these spots are like giant warehouses full of stop-loss orders, and that is exactly where the big institutions go hunting for their liquidity. All right, now for the fun part. Let's walk through the exact playbook, step by step, for how you can spot and trade these traps. And we'll start with a buy setup. Okay, so watch how this unfolds. First, the price breaks below a super important level, like the previous day's low. Now, to 99% of traders, what does this look like? A classic breakdown, right? Their instinct is to smash that sell button, expecting the price to keep dropping. And then, snap. The trap shuts. Out of nowhere, a massive bullish candle appears, usually on a huge spike in volume, and it shoves the price right back above that level. That's it. That's the institutional move right there in plain sight. They just soaked up all those retail sell orders for cheap and are now ready to drive the market the other way. And this is the engine that's going to power your trade. The move gets its fuel from all those sellers who are now trapped. They're underwater, they're panicking, and they are forced to buy back their positions to cut their losses. Their panic literally becomes your momentum. You are trading their pain. And the sell setup? Well, you can probably guess. It's just the mirror image. Price pokes its head above the previous day's high, sucking in all the eager breakout buyers. Then, a huge, bearish candle slams the price right back down. The institutions just unloaded all their shares onto those trapped bulls. So, knowing the pattern is one thing. That's a huge step. But professional traders know that when you trade is just as important as what you trade. So let's add another layer to this strategy with some pro-level timing filters. Okay, here's a super simple but incredibly powerful rule. In the first 30 minutes of the day, you ask yourself one question. Is the market negotiating or has it decided? If the price is just kind of chopping back and forth across the opening price, that's what we call an auction day. The big players are still figuring things out, and that's a perfect environment for traps. But if the price just rips in one direction right from the open and never looks back, that's a trend day. They've already decided, and trying to fight that is a losing battle. And believe it or not, it gets even more specific. Research shows there's this weirdly predictable rhythm to the trading week. Mondays are often just noise, and Thursdays tend to be strong trend days. But Wednesday is often trap day. Statistically, it's the sweet spot for this kind of reversal strategy, often because the big money is trying to flush out all the weak hands that got in earlier in the week. When you start consistently applying these rules, something really interesting happens. You're not just trading a system anymore, you're secretly forcing yourself to build the habits of a professional trader. First off, this system forces you to be patient. You literally cannot do anything until the price gets to one of your pre-drawn levels. If there's no level, there's no trade, period. That simple rule alone will probably eliminate the vast majority of your bad, impatient trades. Second, you learn to trade what you see, not what you think. You stop predicting, you don't enter a trade until after the trap has been sprung, and you get that clear confirmation from the reversal candle and the volume spike. You're waiting for the market to prove you right before you risk your money. And finally, it takes your own emotions out of the equation. By just following a simple, mechanical checklist for your entry, your stop, and your target, you're basically outsourcing your discipline. You remove all that in-the-moment anxiety and bad decision-making, which, let's be honest, is where most of us fail. So I want to leave you with this final thought. The next time you pull up a chart, I want you to try and resist asking that old question, where do I think the price is going to go? Instead, I want you to ask a much, much more powerful question. Where are other traders trapped right now? Because that single shift in perspective, well, that's the key to following the big money, and it just might change the way you see the markets forever.